You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 3 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That funky music means it's time once again for TWIFO, This Week in Futures Options, a program where we break down all the amazing activity going on, lighten it up in the world of futures options. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-expanding Options Insider Radio Network, up to 15 programs. Crazy. 15 programs up on the old network, including, of course, all the great archived episodes of this program, This Week in Futures Options, as well as our latest edition, a bit of a silly one, The Business Show. Check it out if the notion of improv, comedy, and business news mashed together intrigues you. Then check that one out as well. I promise I'm not on that one, so you don't have to worry about my improv comedy skills. You can check all those out pretty much wherever you find your favorite Options Insider programs, including, of course, the mothership, the flagship, theoptionsinsider.com. And, of course, while you're there, click on some headlines, click on some articles. We provide a lot of great content in the written format as well. It's not all radio all the time, even though we do a lot of radio here on the old network. And, of course, you can also find us iTunes, TuneIn, Stitcher, and so on and so forth. Even, of course, our mobile app. And by the way, some of you wrote in saying, "Hey, I can't find TWIFO on the mobile app," that has been fixed. So TWIFO is there as well as the Business Show, so you can get all of our stuff via the mobile app as well. So check it out. We love to hear from you guys, of course, while you're downloading, while you're streaming. If you have a question, you have a comment, let us know. Fire it off via all of the usual ways: social media, email. Pick your poison, however you like. Again, it's all baked into the mobile app as well, if you are so inclined to go that route. And joining me on the old program today, my usual cohort, my partner in crime for all things futures options, Mr. Nick Howard, the founder of a little thing called Bantix Technologies and the creator of a platform we like to use a lot around here called QuickStrike. Nick, welcome back to This Week in Futures Options.
Hey, Mark, what's going on? It's going to be fun to have our little quick chat today about the results from yesterday's vote. So looking forward to it again.
Yeah, it should be interesting. You know, I'm kind of beaming in remotely. If I sound a little bit different, listeners, because I'm beaming in from our mobile studio here in Central Florida, as opposed to our usual Options Insider HQ there in sunny Chicago. And Nick's actually beaming in remotely as well. So everyone's moving and shaking hither and yon. But we're here to talk about pretty much one thing and one thing only. If you guys have been paying attention to the news, you pretty much can probably guess what that is. That is Brexit. The old vote for Britain to leave the EU, the Eurozone, and all the myriad consequences therein that seemed to kind of be a bit of a gut punch, a sucker punch to the market. If you remember last week, Nick, the market was rallying, ball was coming off after all these polls were showing people that maybe the Remain camp was in the lead. It certainly seemed to be swinging that way after the crazy assassination of that woman who was very much in the Remain camp. It seemed like a lot of sentiment was moving the vote in that direction. And then last night, when the numbers started coming in, all of a sudden, the first 10% was counted, and then more districts. It started to seem like Leave was winning the day, and the markets reacted as you might expect, just taking it on the chin. As we are recording this, middle of the session here on Friday, June 24th, all the major markets are in a bit of a tailspin. Most of the major indices off 2% or more. The S&P was off about 2.4%. The Nasdaq leading the charge to the downside, off about 2.7%. So a lot of consternation, a lot of fear going on in the markets. Of course, the domestic reaction is positively muted compared to what we're seeing overseas. We saw the Nikkei off nearly 8%. That's the biggest drop in about 16 years out there. The FTSE 100 off over 10%. The DAX off about 6%. The CAC 40 over there in France off nearly 7%. Pound sterling down about 10%. It was hit a 31-year low. At one point, the euro off nearly 4%. Crude WTI off about 5%. Brent about the same percentage as well. One of the few spots of green on the tape today, Nick, is good old gold. Everybody's flocking into gold. That's up about 5% on the day. But pretty much pick your poison, pick your market, Nick, and it's taken a sucker punch as a result of this Brexit craziness. Maybe let's start, as we are wont to do a lot of times, in the realm of the euro dollars. A lot to say out there. By the way, listeners, you guys want to follow along, you guys know how to do it. CMEgroup.com/TWIO this week in options. Forget the futures. Don't ask, long story, and try to make it lowercase for whatever reason. If you put it in caps, it's not going to work. Don't ask me, ask CME. But check it out there. You can follow along and see all this great data. And Nick, I'm looking at the TWIO report for Eurodollars for this week right now, Eurodollar options. And one thing is jumping off at me right now, which is kind of strange. Overall open interest off about 1% this week, which is kind of surprising. You'd think OI would surge as a result of the activity we're seeing today, and last night going into the markets. And in the first 4 months or so, open interest off substantially, about 2% in the front month, about 2% all the way out till you get about 4 months out. Then it's off about 5%. You got to go pretty far out to get a bit of a gain in open interest out there, which is somewhat surprising to me that OI would actually be down on a week like this. You spent a lot of time in the Eurodollar pit. Does that surprise you, or does that kind of seem par for the course? Is this, I mean, obviously this is an unprecedented event, but is this how you've seen Eurodollar react to surprise events in the past?
Well, I don't know if I have a good answer for that necessarily, but I think what you might be seeing is, last week, if you go back in time and click on the data display settings and look at last week's Eurodollar report, you'll see we were up about 6% overall, and there was a really large increase in the August and the September and the October open interest. So it could very well have been people were getting out of positions they had last week, saw some opportunities to cover some shorts or some longs, whatever they had, prior to the vote, and a lot of the people that I were talking to, everybody was sort of sitting on their hands, waiting to see what happened. So as far as a result of because of the big event, I'm not exactly sure what that answer would be, but I think that more than likely when you see something like that, and it's not a tremendous amount overall. I think we're flat in the Eurodollars from an open interest standpoint, but I would tend to think, at least from my perspective, if I had anything that was remotely suspect in terms of being short some upside or anything like that, I would have probably tried to cover myself. as well. So, I looked at the big chart across the whole spectrum, and it looked like some of the stuff was rolled out a little bit on the curve into the short or the mid curves, right? That's the short dated options on a different part of the Eurodollar curve, like the 1 and 2 years. So you saw some increase in open interest out there, but I tend to think something like this. People were being told, make sure you don't get caught with your pants down, and cover some of anything that might be speculative in nature. So, but still, I think if you go out and look, in the mid curves or the shorts, anybody who's listening or playing along, if you go to the expiration filter and then pick the 1, 2, and 3 year mids to display that part, you'll see there's increases pretty much across the board out there. So a couple of reasons for that might be the fact that people are thinking, okay, nothing's going to happen now. If there's any chance of this going through and they leave, then we're going to definitely see that the Fed's not going to do anything. So now we're going to start to position ourselves back out into the latter part of the curve because we're not going to expect any kind of tightening in this year, or any kind of Fed move in this year. So like we talked about in the previous episodes or the podcast, we saw more open interest in the front month in terms of increases because that's where the activity was thought to be when the Fed sort of being on the table to do some things. Now, if there's some thoughts that they're going to move away from that, and if you see a lot of the chatter out on the web and Twitter and the news, they're talking about the Fed being on the sidelines. So that might have been part of the switch. I think so. Speculative covering potentially, and then the switch to the time frame for Fed intervention again was probably more than likely the case.
Yeah, I'm looking here at the numbers, and you might think, kind of like we've seen in recent weeks, all of the action would pretty much be front month, front term, front portion of the curve. But like you were saying, the mid portion of the curve seems to be where the action is right now, at least I'm looking at Eurodollar options right now. So a little bit farther out. Overall, only about 10% of the action was right in that front month term there, the AUG. You got to go all the way out. Actually, the volume leader for this week was January. Nearly half of the volume for this week coming out there in January, which may surprise some people. The big volume winner on the week, I'm going to go old school, Nick. The 98 5/8 puts. That's what I'm gonna call it. The 98.625 puts. So about 200,000 contracts lighting it up out there. So some people may be surprised by that as well. Not just the open interest kind of falling off in the near term, but the huge concentration of volume in that January timeframe. Again, that seems to kind of coincide with what you're thinking now. Looking at a lot of the probabilities we've been talking about on this show and other shows recently about when or will the Fed move. This event certainly seems to take a Fed hike off the table for the near future. Maybe the Eurodollar activity in January kind of being the market coalescing around the notion that Jan is probably the first reasonable time frame that you could actually get some Fed movement. Of course, the probability when we were looking at it before Brexit, you had to go all the way out to December to get about a coin flip worth of about 50-50 chance for the Fed to move. I haven't pulled up the Fed watch. Maybe I can a little bit later during the show here to see what it's predicting now. But I'd have to go out on a limb, Nick, and say that right now, and certainly this Eurodollar volume is indicating that people are looking beyond 2016 at this point. So let me see if I can pull it up here really quickly to get the actual probabilities that we're pricing in. Of course, this is with the Fed funds products over there at CME Group. Actually, Nick, does that concur with what you're thinking as well as I'm trying to pull up this page?
Yeah, a couple of reasons. I've been watching the Euros this week quite a bit because what you're seeing right now, and we tweeted a little bit about it, the puts were about as fairly priced against the calls that you've seen in a long time. In fact, the 98.62 62.5 strike in particular, and you mentioned that in the December contract, but that part of the vol curve for later on in this year and for early 2017, that was as cheap as I've seen it. And even looking at our quick skew numbers, that part is as cheap as it's been in a long time. So some of that drop in open interest may very well have been, again, I look at it from my perspective. You also had some increases in probably the 99 plus strikes. So I particularly been talking about again, we call it 98, 62.5, 91, 99, 12 and a half. So there was a real an opportunity to get short the at the money and to cover some of that downside at good volatility levels. So my expectation is a lot of that coverage in the December and maybe out a little further could very well have been saying, you know what, this is as depressed as I've seen this strike or this area of the vol curve. I'm going to start to switch my position around to take advantage of the fact that I can get these options back a little bit more cheaply. So that would be sort of one way of looking at it. And again, and that's without me being down there. I haven't talked to anybody this week about that, but just looking at the open interest and just sort of seeing, and I tend to look at the open interest, look at the vol curve from an historical perspective, just since I've been gone, and also how it reacted when I was down there, given sort of similar situations. So that would be my guess in general. So what do you got there on the Fed watch?
They changed this page around a little bit, the way they display the probabilities. I think they changed the whole layout of it. But yeah, it looks like it's not out till February that they're pricing anything decent in here. But I'll have to play around this page a little bit more because they changed the way it used to be a nice one shot of all the months across each other. Now you kind of have to play around with different tabs, and not conducive to good radio here, Nick. But listeners, you could give you a little more time when we're off the air. You guys can check it out for yourself and see exactly what we're talking about there. As we move on to another product that had a lot of, not surprising, a lot of action, a lot of interest. Excuse me, I mentioned at about the top of the show here that the pound sterling bouncing off about, or not really bouncing, but hitting a 10% 31-year low actually out there. So the pound, as you might expect, lighten it up this week as we pull up the TWIFO page here to see exactly what was lighting it up this week from a pound sterling perspective. Kind of a little bit of a different story than we saw in the euro dollar, where everyone is playing in January. Everyone, surprise, playing here right in the front portion, the front month, the AUG, lighting it up. 2/3 of the volume coming out there, and the big option leader right now is the 1.5 call. Of course, the futures were off quite a bit over there. The pound kind of taking it on the chin. So the 150, not surprising. That's a pretty clear sentiment level, a pretty clear demarcation. About 4,000 of those calls trading in the AUG right now. So that's kind of our clear volume leader for the week. People perhaps overwriting it out there, thinking it's not going to get back to that level. People also perhaps buying it on a speculative bounce, saying, yeah, this pound deal is kind of overblown, a little bit hyperbolic. We're not going to know the ramifications of this vote for probably years to come. It's going to take multiple years to work out all of the nuances of how exactly they're going to leave, to renegotiate all of these trade deals and everything else. So the notion that we could somehow price in the impact of this right now to the pound, kind of a little bit ridiculous. Also, the clock isn't ticking. That's not 2 years from right now. They still haven't really decided and have formally announced that they're actually going to leave, so that the clock starts ticking from there effectively. That probably won't come for another couple of months. You're talking 2 years plus at least a few months before all of this nonsense is sorted out. Contracts have to be rewritten, redrawn. This is a long and drawn out and quite frankly very boring process. So the notion that we could sum all of this up and encapsulate it, as the market is wont to do, Nick. They want to try to have the immediate answer to everything, and in the case of this, it's just not really available. So I could maybe see some people saying this pound annihilation is certainly overdone. Maybe not the 1/2 level. Some people, maybe I'm not as optimistic as those folks out there, but perhaps these levels, it's hovering right about a 1.138 or so right now, actually 136 right now as we're talking. So it's clearly well off those levels, but still interesting stuff. Yeah, so maybe, who knows, Nick, maybe I should, as soon as I get off this show, I should start planning a family trip to London. Seems like I can get a lot of pound really cheap right now. How about you? You want to come along?
No, it's funny. I was thinking the same thing because you're not going to see these lows, and typically when you go out there, it is quite a bit expensive. I mean, obviously you can see by the ratio how expensive it is, but they always say it in the terms, like, you always say £1.30, and you always in your head are thinking $1.30, but it's really 1.5 times that, based on what the rate is. But when you look at this and you see those 1.5 calls, like we were trading there as of last night, the market was up there, and a lot of those calls got bought today as part of the volume numbers. And one feature we're going to be adding to our report is the ability to click on these links and to see not only the most active that's being displayed, but also the descending order most active. So in this case, and then what the breakdown in the volume was for the week. So it'll be a nice feature that'll be available at some point, probably sooner to Mark and I than to the general population trial report, but we'll be able to talk about it anyway. But again, the same thing, without knowing exactly what's going on, that volume today could be people covering shorts that they had out there, or people saying, you know what, we're going to get this rebound because we think they're overdone, and this was actually the level we thought it should be. And once the market sort of digest this. So it's really hard to say. I mean, like you were saying, it's a 2-year window at least, and some people were saying up to 10 years that's a possibility. And then again, the reality is, it's my understanding they don't even have to leave if they don't want to, or they come with all these trade agreements and concessions, and it ends up being a status quo in structure, maybe not necessarily in name, but in structure it works out to be the same thing. So there's still quite a bit of time left on those July calls. It's a couple weeks left, so maybe people are just either. I would say there's probably some covers there, and then maybe some people thinking, we're going to retrace. But it's hard to say when you have a big move like this. We basically, all of the downside for the week comes from last night and today. Mark and I, we talked about it a little bit prior to the show, how people were pricing in that there was going to be a stay vote, and now they took out that price in and came back down again. So if it would have been more neutral, we wouldn't have seen such a correction today. And maybe if they weren't, as Mark mentioned earlier too, I mean, even the gambling sites had the odds of leaving were not very good. So like anything, in general, I think in this markets, you're going to see the reaction or overreaction, and then you see sort of a correction to a norm. And my guess would be that this trade will normalize back in the next few days, and we'll see what the important thing will be. See what the curve looks like, right, in the next few days. See what that vol curve looks like.
This is going to be fun stuff to watch. Stay tuned to your TWIO report or the TWIFO show throughout the week, listeners, that you can kind of keep up to date with all the fun stuff that's firing off out there in these futures options products. Speaking of the devil in the details, I was reading something this morning, Nick, that they said pretty much all the regions in Scotland voted to stay, and now they didn't get what they wanted. So this is reigniting the old Scottish independence notion again. So that may come back and derail things. Of course, the notion of Britain leaving may fire off the idea in some of the other big economies in the EU, which could cause further destabilization. So a lot of interesting stuff on the horizon. Let's maybe wrap it up, Nick, with the other product that seemed to be lighting it up. One of the few products lighting it up to the upside today, that is, of course, gold. Gold kind of firing off on all cylinders, everyone deciding pretty much in unison. The one thing they could probably agree on after Brexit was that let's all fly to gold. That's the safe haven. So gold rallying hard today, up about 25 handles or so as we're recording this. And about not surprisingly, yet again, July, the front portion of the curve there being the volume leader, about almost half of all the volume we're seeing out there in gold right now being very near term. Again, kind of reinforcing the notion that this is very near term, very cautionary, very immediate paper done as a near result of what's going on out with the vote last night, and people just looking to fly to any quality they need. They need to get somewhere right now, and to go in the safest, easiest, cheapest part of the curve that's out there in the July, and that's kind of leading the chart. No surprise then. That magic level, that 1350 level, Nick, is also the strike du jour for this week, with the July 1350s leading the charge. The calls, about 7,300 of those bad boys lighting it up as at this week, as I'm sure a lot of that coming just in the last 24 hours or so here, Nick. So a lot of people piling in at that level. We're hovering right about let's see, the futures right now. I'll have to pull up. I think about 1323 or 1325, around that level or so. So about 25 handles away from that. So a little bit of optimism there. Looking at the 13.5 level. Open interest about up nearly 3.5%. Maybe again, probably a lot of that coming in the last 12 hours or so as well. So probably the week up until now was probably a fairly quiet week for gold, and then it kind of just lit it up in the last 12 or so hours. Everyone looking for that flight to quality. Not seeing a lot, except for front month aside, which is where all the craziness, Nick, is. That's where you're seeing a huge swing in the skew out there. But aside from the madness of front month, not really seeing a heck of a lot. I can't even call that front month. It's got 3 days left to go, so it's pretty much a weekly/daily at this point. So you can't really talk vol skew out there with any semblance of authority. It's more just pure gamma at this point. But the rest of the months skew kind of being relatively stable, which is kind of interesting. And again, just lighting it up across the board. A lot of paper, a lot of interest. I think gold's going to be the haven du jour, at least for the foreseeable future here. Nick, any thoughts on gold here as we're winding down our big Brexit bonanza?
Yeah, I mean, if you were watching last night, and I think everybody probably was, no matter where they were, we hit almost $100 higher in the gold, right? So that let's see, that put us up about, it was traded like 1363 almost on the highs. Let me look here to be exact. Yeah, so the high about 1362.60, and that was about 11 o'clock at night, which is about 5 o'clock in the morning, which would sort of correlate to when there was an official announcement of the vote being completed. So there was a big push up there, and it looks like a lot of gappy trade, and it came back down to 1340 range, and it's only up for the week about 28 handles. For today's change, since yesterday it's about 60 handles. So again, it was one of those things where nobody was really too concerned about it. You didn't see anybody rushing in to think that this kind of thing was going to happen, and now they reacted to it, and we're right back where we sort of should have been if that was the case. As far as that 1350 strike in the front month, yeah, you are exactly right. Most of the activity took place today, and there's probably a good chance that there were some buyers out there in the late night Globex. So it'd be interesting to see what that time frame breakdown was specifically on that strike. But again, it's almost like this should be this day in options, because everything that happened prior to this is sort of washed away, because it was just a big reaction to everything, and we will be trying to do a this day in options report as well, so you can get a good handle on what happened specifically today. But yeah, I think the big telltale will be how things play out. Today things will settle down or settle into a range, then we'll see we'll see what the news is over the weekend, but then we'll see how the open is Sunday and then Monday, and that's going to give us a good idea of where we're going to go. And then we have a short week next week because, I think it's a half day on Friday, but you have you're running into the holiday. I'm sure that some people will be taking off a little bit early because of we're not going to really know where we are maybe for a couple 3 weeks until we get the regular population back in the trading, and then the following week is off on Monday and a short week, so some people will probably be taking that off as well. So I would think that we are in for a choppy ride here on the underlyings for a lot of these products.
Yeah, I have to concur with that. This is kind of just first blush. This is the market's gut reaction to this. It's going to take a few weeks at least to get all that sorted out. And like I said, it's going to take several years beyond that for us to actually know what the heck is going on with this vote. So a lot of interesting stuff for us to sink our teeth into on future episodes of TWIFO, but unfortunately, that's all the time we have for this Brexit, easy for me to say, Brexit breakdown bonanza here on TWIFO. Before we go, Nick, give our listeners, you mentioned some of those features you're planning to add. Any other hints, any other teases you want to leave them with for cool stuff coming down the pike from Quick Strike? Now is the time, sir. The floor is yours.
No, but I say the same thing every week. I think I just encourage people to go out there and look at the CME Group website to get access to all the free tools. I think you're going to find a great amount of information there. If you need a bit more, then come give us a look at our subscription-based versions of Quick Strike. But I think this TWIO is going to become more and more interactive and more available. So you can not only see what's happening over the course of the week, but you can dive in, or deep dive, as Mark likes to say, into the particular cells to see where the action is, what the activity is, how it relates to the week, that kind of stuff. So just encourage you to go out there and take a look. And if you like the reports, just let Mark know. And if you're looking for more, let us know, and we're glad to try to accommodate.
All right, everybody. Thanks for that, Nick. And we'll see you guys next time on This Week in Futures Options.
This Week in Futures Options is brought to you by Quick Strike, options pricing and analysis software. Quick Strike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered. With market data reports ranging from open interest to the term structure of volatility, QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.